What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm going to be doing an update on natural gas prices.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up on.
And in today's video, first of all, I will show you where we are on the price chart and how we caught this bottom of its recent price action. Then I will continue with the fundamental news and I will show you what news you should pay your attention to in order to know the potential direction of its next movement. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So, and before we dive deep into all of this, guys, Merry Christmas to all of you and Happy New Year. And I wish you the best of luck. So, let's start with the price chart. I made my previous video right here. Let me show you more thoroughly. At this point, when this asset had the first bounce out of the range of about $24, and my main assumption was that we should establish another potential leg to the downside, and I drew this line and I showed you potentially this type of bearish divergence that this asset, this ticker symbol might have. By the way, I covered 3 ticker symbols directly related to natural gas prices. It is a leveraged ETF BOIL, it is a NATGAS spot prices and NATGAS futures. And let's continue with the ticker symbol BOIL. So guys, as you might know, we didn't break the previous bottom, and I've told you in my previous video that for those of you who entered your position right here, and on the video before my previous video, I've told you that we might have this reaction because we had an extremely high volume. And this volume, as you can see, we are on daily time frame on ticker symbol BOIL. This volume is the highest one among the, basically for the entire year. And this is a very indicative volume. So let me show you further. Let me zoom into this price section, and I have to say that we didn't break the bottom of this price section. And for those of you who don't know, we are forming the movement to the downside, and if my assumption is correct, we are in the 4th wave of the retracement, and this corrective wave should have a simple zigzag shape. And I will show you what should we expect next in just several minutes. And for now, let's continue with the fundamental news. First of all, let me pay your attention on this news. We are on tradingeconomics.com, and here let me quote you this. US natural gas futures rose about $2.6 per MMBTU, marking a more than 4% weekly gain after 6 consecutive weeks of decline. Government data showed US utilities pulled 87 billion cubic feet of natural gas from storage last week, slightly more than market expectations of an 80 BCF decrease. Nevertheless, gas in storage remains 8.5% above the seasonal norm. Additionally, forecasts of milder weather and reduced heating demand next week indicate utilities will draw less gas from storage than usual until the end of December. And guys, this is one of the catalysts that you should be aware of. And the second one, let me show you this. You know that natural gas prices is highly dependent on the oil prices as well. And we have major news on the oil market that was disclosed just 3 days ago, that Angola to quit OPEC, reducing membership to 12 countries. Let me quote to this. Angola has said it is leaving the Organization of Petroleum Exporting Countries with effect from January the 1st, 2024, after exits from Ecuador in 2020 and Qatar in 2019. Angola, which joined OPEC in 2007, produces about 1.1 million barrels per day, compared with 28 million barrels per day for the whole group. And guys, it is quite high share of Angola in the total production capacity of the OPEC countries, and that is why most likely Angola will increase its production rates, and this will lead to lower prices for oil in general. And if and when oil prices goes lower, we will see the next potential leg to the downside for the natural gas prices as well. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, on my previous video, I've told you that we shouldn't break this previous bottom, the lowest point of this asset, and if you entered your position right here, you could put your stop loss on a green territory, or you could book your profit at this very point, and it is quite a substantial profit of about 16%. And here we have another quite interesting pattern. Let me delete unnecessary tools. Let me show you that theoretically we have to have an ABC correction right after the motive wave. And for now, on a daily time frame, on ticker symbol BOIL, we have only a wave. And let me show you like this. We have only a wave. Then potential, this is the bottom of the B wave, and it is a very good contender to be the B wave. And we have to see the C wave. And C wave should be the ending wave for the entire fourth wave. And if my assumption is correct, we might have another leg to the upside. And guys, let me show you the price target of this wave. Let me show you like this. We can project the price target for this C wave from if we pull the Fibonacci extension tool from the bottom of the A wave to the top of the A wave and project it from the bottom of the B wave. And the most probable target is 1-to-1 extension. It is the exact same length that we had on the A wave, but the second price target is 1.618, and it is the confluence level with our 0.236 Fib retracement level. If I pull, let me show you in details, if I pull this tool from this top for the entire third wave, from this top to this bottom. And guys, this might be a very interesting point of control. And for now, we have another possibility to play this potential movement to the upside. Definitely, it is not 100% guaranteed, because it is more risky, let's put it this way. It is more risky to enter your position on a corrective wave rather than on impulsive waves. But still, we have two potential stop losses. If you enter your position right here at the current range, your stop loss might be at the previous bottom, at the bottom of the B wave, and it lead to about 9.27% of downside potential, but the upside potential is about 24.73%. It is not the best risk to reward ratio, and that is why you have to accumulate your position on the downside. And this will improve your average price, and it will reduce your risks and increases your potential profit. And it is not financial advice, but guys, be very cautious with any position on natural gas prices, because we might have a lot of turbulence for the upcoming weeks because of Angola's actions. And this definitely might affect the natural gas prices as well. But in general, I still stand on my position that we have to have one more leg to the downside to complete the fifth wave. And if and when it happens, it will be a perfect entry point to catch the entire wave to the upside that might lead to extremely lucrative profit. So, I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants you.